Good morning, everybody. Thank you for coming. First, I'd like to congratulate all of you for being here, learning about natural resource, gold, mining stories in what can only be described as the bottom of the market. You are all, in my opinion, ahead of the market and should have some pretty nice returns over the next few years. For this company, the disclaimer is actually fairly important. We are a pure exploration company at this point. We have no feasibility studies, we have no early stage engineering studies, and we have no resources. Probably the best way to describe our company is on the cusp of becoming a development stage company with two significant assets that are going to the resource definition stage as we speak, and I'll tell you something about those right now. With the discovery of our Grasset nickel about 18 months ago, we got a lot of questions from our shareholders about what kind of company are you? Are you a gold company? Are you a nickel company? The reality is we're both, and at the same time we're also an exploration company. Our Grasset Ni-Cu-PGE discovery in the eastern part of our project was found about 18 months ago. In 18 months of drilling, just under 100 drill holes, we've already defined a half a kilometer of strike length, over 500 meters of vertical depth, including last Monday we discovered a high-grade core down to the 450-meter level. And I'll give you some details about that. One of the first discoveries we made, and one of the things that got us on a lot of people's radar, was our Martiniere gold system, including the Bug Lake Gold Zone, an extraordinarily high-grade gold system on the western part of our property along trend from Detour. But at our essence, we are an exploration company. Our business model essentially is what Darren Wagner has successfully done in the past, which is to find a discovery, define it to the point where it has value to a major company, and then either partner or sell that asset off. One of the fundamental cornerstones of investing in this space is understanding that the same talented group of people, and most of them are here today, a lot of them are here today, always seem to have the success, and we're no exception to that. We have a culture of exploration success in our company. I'll give you a little bit of history on Darren Wagner, our CEO. He and I worked together for about 6 years on a group of companies, Platinum Group Metals, Mag Silver, and West Timmins. He had the discovery of the Thunder Creek gold discovery across the border from Lakeshore Gold's mine in 2009. Within 6 months, he took that company from a $12 million market cap to a $424 million acquisition by Lakeshore Gold. So $400 million of value accrued to our shareholders in the same type of thing we're doing now. Darren immediately formed Balmoral, staked the Detour trend project that I'm going to talk about today, and allowed me to take some time off. I joined back up a little bit later. We are 100% Quebec, we're 100% Canada, we're 100% the Abitibi region. This is one of the highest concentrations of high-grade gold mines in the world. Roy-Noranda, Larder Lake, Kirkland Lake, Timmins. The challenge and the opportunity for Balmoral is our property package here. The reason it was available to us and the difficulty in exploring it are the same. It is covered with between 10 and 80 meters of glacial till, which means that two of the most valuable exploration techniques usually available to people, geochemistry and prospecting, are really not usable for this project. So we've had to become experts in deep overburden drilling and deep overburden geophysics. And since we are becoming a base metal company, infrastructure is incredibly important, and it almost couldn't be better. When you have a discovery and you want to build a mine, you want to be far enough away from people that you're not building it over a town, but you want to be close enough that if you have to ship concentrate, which you do in the case of a base metal mine, you're close enough to reach it. We have a major airport at Metallurgy here. Glencore has their Brachemac-McLeod VMS mine with the CN rail line actively loading ore 55 kilometers as the crow flies. We have some of the cheapest hydroelectric in North America running right through the middle, right around the project. And we're about 25 kilometers to a major highway. So pretty much the most perfect infrastructure you could have. Until Monday, I would have introduced this slide by saying this is the highest grade nickel you will likely ever see in a core sample. This is 14.6% nickel from the massive sulfide of our Grasset Horizon 3 nickel discovery. On Monday, however, we released 7.5 meters of 10.5% nickel from the 450-meter level of the same system, and it had samples within it of 19% nickel. Now, what the significance of that is for our Grasset discovery is that even if you get this nickel tenor disseminated or net textured throughout the system, you have a very good chance of having extremely high grades. This is what it looks like in long section. Like I said, we've drilled about 100 drill holes. We've defined 500 meters of northwest-southeast strike length. We also have a horizon 3, which is about 1.2 kilometers long, and the system is completely open at depth, and it very likely has another component in here before the Sunday Lake deformation zone. A little explanation on what this is. This is a long section running here to here along the heart of the deposit. And what the colors you see are nickel meters in true width. So the thickness of the deposit multiplied by the grade. So the very light colors over here would be, I believe it's 0 to 5. So 5 meters of 1% nickel. And the thicker portions in here are upwards of 50 or 60 nickel meters, which would be 10 meters of 5% nickel. So the best way to probably look at this in a mining scenario would be an open pit that would sit in here and moving to an underground, similar to the way that Raglan is mined or some of the early days of the Sudbury or Thompson mines. Monday was a very big day for us. It's interesting, everybody's talking about how the market reaction to news. We announced 7.5 meters of 10.5% nickel in one of the deepest drill holes we've had on this project. And what the significance to the project was, we had defined this high-grade core in here down to about the 300-meter level. This drill hole here was a very wide intersection, but it wasn't very high-grade material. It wasn't the 2-3% that you would need to pursue with an underground mine. This hole, however, had 60 meters of 2% nickel and 7.5 meters of 10.5% nickel. So the viability of this mine in an underground scenario was greatly enhanced on Monday. Interestingly, the market reaction when we announced holes in here was to the tune of 2.5 million shares, and the stock would go up about 60%. In the world that we live in now, this announcement gave us about 500,000 shares of volume and no movement in the stock price at all. But we persist. This is exactly what you want to see with a base metal deposit. Great continuity between drill holes, simple geometry, simple scenario, and importantly, vertically dipping, which will help in the future mining of it. About 3 weeks ago, we announced the metallurgy. Something that can kill a base metal deposit is low recovery. I'm happy to report that we're in the top quartile for percentage recovery, not amongst nickel projects that may or may not work. These are amongst some of the operating nickel mines and advanced stage nickel mine projects in the world. 87% recovery would give us about 1.4% nickel out of the project. And also importantly, our concentrate runs about 13.6%, which means that it'll be marketable to the smelters in the area. Typically in North America, you don't get an isolated nickel sulfide body. Sudbury, Thompson, Raglan, they're in a series, they're in a line, you get a number of them all in a row. Already, 6 of our 8 exploration drill holes along this trend, the ultramafic sill complex that hosts Grasset, have hit nickel sulfide material. We're going to be following up with this winter. As soon as the ground freezes, we're going to be drilling holes all the way through here, essentially grid drilling and vectoring on the discoveries that we've had. Now, the M&A potential in the nickel space is quite exceptional. There's very little available out there, and the premiums that are paid in the market are quite phenomenal. Probably the best example for this was the Nova Bollinger acquisition by Independence Group in Australia. It was about a 700 million pound nickel deposit, and they paid $1.8 billion Australian for it, near the bottom of the nickel market. And that equates to well over $1 per pound of nickel in the ground, or about 25% of the contained metal value. And there are very, very few deposits like Grasset available. The nickel story has a complex aspect to it and has a very simple complex to it. I'll talk about the simple one today. The reality is that about 65 to 70% of the world's nickel is being produced at a loss right now. And that is fundamentally unsustainable to the nickel market. So either a combination of cuts in the more high-cost operations or an increase in the price, or both, is coming. I need a glass of water. Sorry about that. The complex part of the nickel market is basically rooted around Indonesia. Indonesia banned the export of raw ore back in January 2014. The Chinese reacted to that ore ban by importing massive amounts of nickel ore, stockpiling it in their ports, and then running it through the nickel pig iron factories, effectively flooding the market. A completely counterintuitive reaction to what everybody expected to happen when 30% of the world's nickel market was cut off, which would be the prices would shoot up. As a result, we find ourselves with very high inventories on the LME right now. So what you have to look at is what's happening in China. And the reality is the ore stockpiles, as reported by the Chinese government, have dropped to essentially zero. The Indonesian portion of that ore is essentially nothing, so the Philippine ore is much lower grade. The Chinese, as of May, have started importing 200, 300, 400% more nickel, raw nickel, back into China to fill that gap, and the LME inventories are starting to drop. If you want to know what's going to happen in the nickel market, watch those inventories. When the inventories start to hit 300, 200, 150,000 tons in the LME, it means the off-exchange stocks are empty and the price should go up. So what's coming? The recent drilling has demonstrated that the zone is open to depth. That's a huge factor for us. Realistically, we thought that we'd wrapped our arms around the deposit. All of that information is now going into the model, and we will have an initial resource probably the third week of January in 2016. We're going to try to time it for the roundup in Vancouver. As I said, the metallurgical test work is excellent, 87% recovery, 13.5% nickel concentrate. And I'm happy that our CEO, Darren, is starting to use the expression grid drill. We're going to essentially, every 200 to 300 meters, we're going to drill all the way along that intrusive complex and see if we can build a string of pearls like Raglan. That's only half the story. The other half is exceptionally high-grade gold. This is 9,710 grams per ton over half a meter that we drilled last year on the Martiniere gold system. This is where it lies. This structural deformation zone hosts the Detour gold deposit. It seems like every time we drill a structural intersection, a magnetic feature, an IP anomaly, we hit high-grade gold. The best concentrations are in what's called the Bug Lake zone and the Martiniere West zone. Because it's so large, because there's so little reward for nickel assets these days, our strategy with Bug Lake is quite simple. We are going to drill the best portion of Bug Lake, about a 1.2, 1.6 kilometer long trend. We're only going to drill it to 200 meters. We're going to do the inexpensive drilling first, and we're going to deliver an extraordinarily high-grade, high-quality asset to the market and see what happens. This is what it looked like in section. Summer drilling on Bug Lake was extremely successful. We resolved between 6 and 8 different gold zones, and extremely importantly, we're able to tie our 25-meter sections together. So the argument could be made before our summer drill program that we had a series of exceptionally high-grade gold drill holes, but did it tie together into a mineable body? It's very much starting to look like that, at least for the first 300 to 400 meters of the system. This is what it looks like in plan section. This is where most of our drilling has been concentrated, and starting in January 2016, we're going to be drilling in here. One of the last drill holes from our 2015 summer program actually intercepted the same system down in here, so we've added about another 600 meters of prospectivity to the system. This is what it looks like in cross-section. All of our energy is being focused on the top 200 meters, and it's worth noting that this is about 10 meters of overburden and about 45 kilometers away from Detour and about 45 kilometers away from the Casa Berardi mine to the south of us. So we've got some very interesting neighbors. And did I mention we have extraordinary grades? 1,100 grams over 5 meters, 270 grams over 4 meters, 35 grams over 4.15 meters. Again, this system deserves to have six drills working on it 24/7, defining the first 2 to 3 million ounce resource on it, but the market simply doesn't support it. This past summer, we released 20 grams per ton over 45 meters, including 11 grams per ton over 11 meters from a completely different section, and again, the market reaction was basically nil. We're pragmatic when it comes to the gold market. We also have a nickel asset that grows very quickly, so we have pulled back the reins a little bit on Bug Lake. We'd love to go in and deliver a 2 million ounce gold asset to the market and really see what the potential of the system is, but it's too expensive. So we're pulling back the reins a little bit, but we're still moving it forward. So this winter, as I mentioned, the southern half of the Bug Lake gold zone, about 25-meter drill spacings, that will form the basis of a resource that will be coming out probably the second half of 2016. As I also said, we discovered another 600-meter extension to it. And Metallurgical testing is probably the next news release you'll see. Sometime in December or January, we'll be releasing the metallurgical recoveries on Bug Lake. We always set aside about 15 to 25% of our budget for grassroots exploration. As I said at the beginning, this is one of the most prospective pieces of the Abitibi Greenstone Belt still available. And the company has won Prospector of the Year in Quebec 2 years running, 2013, 2014. We're busy on our assets to win it in 2015. We believe that there is another Detour gold mine within this body somewhere hidden underneath that glacial till. We believe there's another Brace-Mac-McLeod mine, VMS mine, sitting under there. We didn't expect to hit a nickel deposit, but we hit a nickel deposit. And we have upwards of 200 grams gold sitting right around our nickel deposit. It is truly a jewelry box of opportunity, this piece of property. So the nice thing about being a shareholder of Balmoral is you can wake up in the morning and not only have a resource being delivered to market on both a gold asset and a nickel asset, but you also have the prospect of having a new world-class discovery in one of the best areas you could possibly want to work. A little bit on our structure. We've got 117 million shares outstanding. We just raised $4.5 million at 75 cents, about 45% over market, thanks to the charity flow-through financing structure available in Quebec. So the working capital is actually about 11 million right now, and we can get all of this for 48 cents a share, or about $55 million market cap. As Eric said, I'll be in there. If he has any questions, please come and see me.
Okay.